the question I'm being asked most at the moment, Raoul, is, Pete, what do you think the top will be? And we are seeing a range of predictions. I've seen 288 from Plan B. I've seen 400. I've even seen a tweet storm from you where you talked about it even has the ability. I think did you peak at 1.2 million?
No, I've peaked at 1 million, but not for this cycle. But it's possible that it overshoots. So I've just used a regression line and used the trend of the log scale. And basically it says somewhere between Plan B and 400,000, 400,000 is right, but it could actually hyperextend to get as high as it did from trend in 2013, which would give us 1 million. So I think it's skewed slightly higher than people expect. I don't think it gets to 1 million, but we've got institutions coming in. Who knows how this dynamic changes? So I do think it's interesting. The other thing for people to bear in mind is there's a couple of price hurdles that are coming up that people haven't thought through. The first one is Coinbase's IPO. So if you are an institution who wants to buy Bitcoin and you've got to go through all this rigmarole to try and get it signed off, and Coinbase IPO comes out and it's a $60 billion company and you can stick a few billion in, it's a good enough proxy for a while. So my guess is that's going to take out a lot of demand from institutions in the short term. It's not a long-term thing, but it will absorb quite a lot of the demand. The next big thing after that is I think 100,000 is going to be an issue because a lot of people got in around 10. A lot of people will have made 10 times their money, and 100,000 is a round number, and people think, let me take half my chips off the table. So I think we might see a longer correction. And my guess is my framework I'm using, and I'm using some seasonal analysis, suggests that we go up to 50,000 into March. That works perfectly for the Coinbase IPO. Everything calms down because institutional buyers stop piling into Bitcoin futures. They buy Coinbase first because they can justify it easily because it's just an equity. And then the next run, I think, takes us to 100,000 into June, by which case there's going to be a lot of profit taking.
Yeah, well, this is why, I got another email today. The lady who does the transcriptions for the podcast, she said, I've listened to so many of your podcasts, I'm now getting FOMO. I don't know what to do. I want to buy Bitcoin. And my advice to her, like I've said to everyone, is you have to have a really long time horizon. You really have to be thinking 5 to 10 years. If you start thinking shorter term, you're going to be at risk from the volatility. And I've kind of been there myself, Raoul. I said at the start of 2019, I was going to give myself 10 years. And I've been looking at these price targets and thinking about what might happen in the cycle. And, knowing whether the top is 100, 250, 400, it's really hard to know. And I almost don't want to play that game. So I'm thinking, for the sake of 4 years, I think I'm going to wait for the next cycle because, that's a considerably different place in 4 years' time. And I'm patient.
Yeah. The point you need to think about is what happens in that 4 years? How much cash do you need? You will take some money off the table and run the rest. I think most of us will do that. I don't think most people because they now understand what this is. So I think people take some off the table at whatever high price you choose. People will scale out. Institutions will keep buying further up for the reasons we talked about before, market cap reasons, stuff like that. And then I think you're right. A lot of people will just hold a lot more than was held on the last cycle and a lot more than was held on the cycle behind that for those reasons. But the potential returns each cycle go down as the market cap gets bigger and bigger because retail cannot drive. If I sell it to you and there's only one in existence, you can drive up the price. If there's two of you bidding for it, you can drive up the price. But, a lot of retail investors are in, the institutions coming in, and then it becomes really hard to go from a $5 trillion asset to $10 trillion to $20 trillion. So I think the returns go down over time anyway. And I think we've seen that in the cycles. So, but what is the return from the next cycle peak to the next cycle peak? I don't know, call it 200 to 2 million, who knows? Another 10x. Not many things give you 10x.
Yeah, well, I guess one interesting point would be that if we get to the point where Bitcoin does hit a $5 trillion market cap, is there a risk that people are less excited to invest? Because it is quite exciting right now because you have those high figures where people talk about multiple hundreds of thousands. Do you think psychologically it potentially loses some steam there? What do you think happens at those kind of like $5 trillion market caps?
I think this is a really good question, and I can see the community starting to think it through. It started with stacking sats, but it feels a bit awkward and a bit of a forced narrative. We kind of have to explain to people that the price is not, the headline price. You don't have to buy one of these. It's basically, we just have to explain that to the average person. But again, don't forget, retail is handing the baton on to institutions here. So retail investors will find it hard, and we all want retail participation, not because it drives up prices, because we truly believe it's the best thing for them to do, to have a chance for their futures to be able to pay off student loans or whatever it may be. So we all passionately believe it has a real place in people's personal portfolios, whoever they are and however little money they've got. But the institutions, will continue to drive that whole thing higher because they understand that price is just a number. It's just a number. We just have to get better as a community. As you know, the thing for me that I've been trying to drive is institutional adoption, speak the language. And I can tell from you who haven't come from finance, asking questions, I'm like, okay, fascinating, right? Because you're thinking as an individual investor. We have to now also talk the language of those individual investors and say, listen, just because it's $1 million doesn't mean you can't buy any. But Robinhood, good or bad, have also fractionalized shares. So people are starting to get it.
So when you go and look at your Bloomberg terminal, or you go to a website that's full of different prices, commodities, stocks, etc., whenever you see Bitcoin, even me as a Bitcoiner, I still look at it as this like weird little rebel thing. Do you think we ever get to the point where Bitcoin just sits there alongside gold, silver, and people just consider it this commodity that's just alongside them, and doesn't give it that kind of like weird little look? Do you understand the kind of question I'm making?
Yes, it depends. If it just remains a reserve asset, and when it gets, full price discovery, it goes to this 5 volatility asset. It looks like kind of bonds or gold, or gold's a bit more volatile, but something of that sort. It will just be another line on the Bloomberg screen. And, everybody analyzing what's going to drive the price. Do I need to increase my allocation? However, there's the other part of this whole equation that you and I really haven't talked about, is what technology gets built on it. So therefore,
true, yeah.
What could it be its future value? So maybe it always remains this weird hybrid of a call option on technology and a reserve asset at the same time.